Infosys has already hit the screen. Forget about the numbers. The biggest headline is that the FY24 guidance has been revised. 4 to 7% was something that the street did not like last time. We had seen the stock tanking 15%. They've revised the guidance, but they've revised it downwards to 1 to 3.5%. It's a big miss on the guidance as far as Infosys is concerned. It's a bit baffling to me to kind of see that number because we're used to seeing double-digit growths of late. We're used to seeing 5 to 10% at least kind of growth. Yes, they've managed to retain the 22% margin guidance, but the revenue guidance has been scaled down to 1 to 3.5%. Nobody on the street was expecting that. It was expected that 4 to 7% might become 4 to 6%, but there was no expectation on the street that the lower end of the guidance will be brought down to as much as 1%. I'm not sure if there is something specific that the company is calling out right now, but it looks like a very weak set of numbers, and this is despite Q1 has been in line. So as far as the Q1 number is concerned, they've managed to report a constant currency growth of 1%, which is towards the higher end of the range. The operating margin this quarter has also come in at 20.8%. We were working with a number of 20.9%. The deal wins too have been decent, $2.3 billion, and that compares with $2.1 billion that the company reported last quarter. So a bit of a dichotomy for me, because this time around Q1 has been an all-right set of numbers. There's not much to complain, whether in terms of the constant currency growth, the margin, or the deal win. But the company has scaled down the guidance. That means they're expecting Q2 and H2 to be a lot worse than what we are seeing. Let's try and decode that with Mahantesh Sabrad as well. He's joining us on the show. Mahantesh, you heard my initial comments as far as the details are concerned. What do you make of the fact that the guidance has been scaled down to 1 to 3.5% now?
Yes, you're right. That guidance is a bit disappointing. Let's look at it this way. The year-on-year growth number for revenues has been 4.2% for the quarter one already. So that means the balance 9-month period, if they were to hit the 3.5% guidance range, it will have to mean a much slower growth than the 4.2% that they have achieved in the first quarter. That's really very disappointing.
Okay, so Mahantesh, despite the kind of downgrades that we had seen last quarter, do you expect more downgrades to come by on Infosys?
Yes, in a way, because the margin guidance as well, it doesn't seem to be very strong or inspiring. They have talked of only 20 to 22% kind of margin guidance, operating margin guidance, and that doesn't inspire much of a confidence. While they do talk of large deal closures and robust deal pipeline position, probably that pipeline position may take a longer time to close out, is the hint that we can get from the guidance that they have given.
Okay, I think Omkar Tanskale is also joining us. Let's try and get his view as well, because this time around $2.3 billion worth of deal wins is all right. The margin performance of 20.8% is all right. The 1% constant currency growth for this quarter is also okay. But what is not okay is the fact that they're talking about a growth of 1 to 3.5% for entire year FY24. Omkar, your view, and what was your own expectation of growth as far as FY24 is concerned?
Yeah, the results are much in line on a broader perspective. The only concern about me is the guidance range that they have given me. We were expecting around 5 to 6% of the growth this year, but it's only I think it's below than our expectations currently. The deals to win momentum for the quarter still remains positive, but I'm quite worried about the conversions of the deal into the billing cycle, or let's say on a revenue side. So execution capabilities may have the difficulties, or they are also facing some delays in the current contracts or whatever in a negative side. So it's quite a worrying about the Infosys as a whole.
The take coming in as far as Infosys is concerned, let me just quickly read out what the management has to say as well. Salil Parekh says that they have had a solid Q1 with a growth of 4.2%, large deals of $2.3 billion, which helps them to set a strong foundation for future growth. Generative AI capabilities is something that they are saying is resonating well with the clients. They are beginning the transformative stage, and they have expanded the margin improvement program as well. And that's why they're holding on to the 22 to 22% guidance. Nilanjan Roy, the CFO, is saying that the Q1 operating margins were resilient in an uncertain macro environment on account of the cost optimization efforts. They have managed to bring in higher utilizations, etc. as well. And the ROEs have improved as well.